Okay, this is a bread and butter setup that occurred today. Look, we can see here where this is the 12 midnight candle. And this is one of the nice bread and butter setups, the ones that like the nice perfect classic one. So what we have here is the open 12 o'clock open. Okay. This is 12, 1, 2, 3. So we have at London, we have the stop on down the below 12 midnight. Um, and price turns around and goes up. And then during New York, this is 12. So 12 is 6 a.m. This one here this is 6 a.m. and then this here is 7 a.m. This is set, so 7 a.m. is doing a pullback. Now, most people would expect a deeper pullback, but look what's here. You have a this high, um, and this push here just cleared this swing high here. So this push just cleared it. So right here is what? Institutional order flow entry drill right there. So you expect the price to just come down a little bit and turn around, um, and turn around and did. So that's what you do after 7 o'clock. You're looking for a price to turn around, and then you're looking for a PD array. So the first PD array is the institutional order flow entry drill here, which is note also is it's in between this the current highest level that got filled. So it's from here to here. So this is the middle point here, and just note that fair value gap is formed when the institutional order flow occurs, and that if it price cleared a high or a low, whatever, in the opposite direction, it cleared a high, and then to the left of it, you see another fair value gap, a balance, basically a balanced price range. So this came down here, came up here, making this a balanced price range right above um, this swing high. That usually is a good sign that the institutional order flow entry geo is going to play out. And then you also to the left, you look to see what structures are up there that can be being reached for PD arrays. So as targets for for selling to the willing buyers. And you have this here is all the way here. This order block is here. There is a fair value gap here or a CB here. It did get it did get filled here, but it spiked through there, came here. But you have these equal highs. So on this day here, this high, this day here, this high. So you have liquidity above here. You have an order block here, and let's pull out. Yeah. So that's what I will be seeing happening. Um, this here, yeah, this could actually be coming to fill this area here actually, before coming down. So maybe today is Wednesday, maybe Thursday, or there may be a TGIF that occurs on this. So it may come up here and then turn around and then come down for TGIF. So maybe continue up and then turn around for Friday. Um, Fill all of this before dropping. It would also show that it would also be that it let me see this here. This breaker here. Yeah. So we have a breaker there, and then we have these last two uphold candles here. And again, long term, I'm thinking it's going to be trying to go down. And also, ICT had put in his opinion on the dollar, go trying to hit those weekly PD array above current high price. Current where that um, consolidation had occurred way up. So above that is a weekly PD array above there, and he was seeing price go up there. So um, you know, so that can be something that it goes for. If it comes all the way up here and turn around. It could just come up to this area and turn around as well, which would actually be better and leave this gap here. But we see that the breaker wasn't really hit. Um, so that's a possibility there. All right, that's it. Just wanted to show the PD array information. That's it. Oh, I forgot to mention. Okay, so in the bread and butter setups, he says 20 to 30 pips. That's, you know, like some intraday scalping type stuff. So let's just see, zoom in, um, and just see how many pips will it be to come and get up to this order block here. So entry would have been a little bit before this hit right here. Entry would have been around there. And so far we have 16, it came up 16 pips. So if we can get 20, let's see, by the time we get up to here, yes, that's 26 pips. So, yeah, so it has that potential and it's running. So that's really a nice move. I can't remember if he went down to the 15 for it. But on the 15-minute chart, we have a fair value gap here, which is the one, the institutional order for entry drill that you saw on the H1. So on the 15-minute, we have a little fair value gap here. This here, even if you were to ignore this candle here, we have it cleared there. So yeah, so that's what would have so this one here is the nearest one, and then we have this line here that I had from forever, a weekly high, April 2015. So I misspelled high. Okay, so that's what we have here. We have this fair value gap or GISI, and price came right down there. And right before that, because we have a spread right here, average about 0.5. We wouldn't go exactly for this low. Take care of the spread. So yeah, but somewhere around here. And because it's and because it's New York Open, that we would be in front of the charts. And once price got here, there would have been an entry put in. Could have got tripped on this one. Went back a bit. Came into the negative a little bit here. Just basically 2 pips. You had the spread, 2 pips drawdown. And then we have this move here. So yeah, it's pretty nice. So also on the 15, you see, you see that, let me just do one. Let me see. So yeah, once this, I'm gonna drop a line to see structure. So as you see, it says 13. That 13 is 6 o'clock in New York City. Let me go back to the 15. And okay, good, got it. So yep. So right there, for the trip. All right, so that's the bread and butter setup. Entry could have been, I mean, even down here we see 1, 2, 3. We would have been anticipating this. Let me pull out a bit. Okay, so um, yeah, so this is New London, of course. This is London, and yeah, now that's 245. Um, yeah, 245. So we have the 1, 2, 3 candle pattern, and it's occurring. Yeah, there's wicks here, but the body is the bulk of the volume, and it closed down under here, and this order block here, and yeah, I don't see any stronger confluences. I guess this W, the structure here, low, high, higher, low. And then it did clear it here, came down, came up, spiked up here, and so it's not a strong, it's not a strong signal that would have been like, hey, yeah, this can be it. Like this is the turnaround. But it is the again in mitigation blocks, so low, high, low, high, higher, low. This here would be the mitigation block. This would be the mitigation block right here. It is known that with mitigation blocks, there's a chance the price can come down to the order block, and that's what happened here. So if I would have noted that, then that's something I would have probably, went for. But the 3 candle pattern, body wise, is here. So 1, 2, 3, and then it came up, and then came down, and didn't take this out. So it did the 3 candle pattern, and then came in, back into the range. And if you go from the body to the high, it came to like 79, 90, or 90. It looks more like 90%, and then it launched off. This is the 15-minute, so for completeness, I guess let's just do that real quick. Oh, actually, let me just use this one here. Okay, so the 15-minute candle here, and drop it there, and then we go down to the 5-minute, and then what we're doing is that's 15, so right before 30, so that's 30. That starts the new candle. So right here, at the end of this is the candle. So this is encompassing the that candle there, and the third candle, And yeah, we have price come up, break above this here, and right here we have a low, a high, a higher low. The same structure seen all the way over here from the previous day. Just repeated that same structure, came up, broke above this here, and came down. We would have dropped fib about here, and price would have came all the way up here and struck and came down to the optimum trade entry. Okay, so that's an optimum trade entry right there. Right there. And price struck optimum trade entry, and the so you have the optimum trade entry here. You do have a fair value gap here, here and there, and you have this mitigation block here. So the mitigation block with respect to here, price didn't come all the way down to this last down close candle, and launched off. So with this type of entry, again, this is London. This is a London entry, and on the higher time frame, the hourly, you would have been targeting yesterday's high. So so we have an entry. I probably would have got in at the 62. I say that because this little doji here, I probably would have he says sometimes eliminate those. So I would have been wondering if the this fair value gap, if you eliminate that, this candle's high and this candle's low. So and then striking this the beginning of this the body of this mitigation block. I probably would have pulled it up a little bit before then, so I probably would have got in here. It would have went against me 1.8 pips, and then it would have launched off. And this is in London, and price still didn't take out the highs over there, but if you see, I would have had 37 pips, and the stop loss would have been down below here. So that's 10. I could have chose it to be down here, but which yeah, the candle, yeah. So it depends on how strong I feel about the move. And like I mentioned to the left yesterday's lower that um, low, high, higher low structure, and price went down to the order block instead of the mitigation block, I probably would have chosen to come down further. So that's a 10 pip stop loss. And by the time right now, almost 40. So at least a 3-to-1. So, but I would have been targeting the previous day high. A malfunction occurred and the recording stopped, so I'm have to do a voiceover on this here. And so I'm saying that that's the equal highs up there, and that's 40 pips, past 40 pips. That's what I'm pointing out, the pips. If I would have got in on the 5-minute work there. The 3 candle pattern is there, and entry on that 4th candle. And I measured out the I just measured it out. Oh, that was a 12 o'clock line there, and price came up and yeah, that's a W, ugly looking W there with a high, a low high and a lot lower high, and price broke above all of those, and that high there and that little high there, price broke over and there, spiked up, showing the if there's changing direction to the buy, and then price dropped down into the order block. That's the breaker, and mind you, this is like looking at the 5-minute, looking at the 1 minute within the 5 minute is what's happening here. What I was talking about, how I can see that. Um, and price came into that order block there and reversed. And right there is the 12. That's the 12 midnight line there. Not that other one up there. That's the 12 midnight one right there. So it came and hit that. I'm showing that this is like the same structure of a W. It came down and struck the mean threshold of that order block to the left and went off.